Welcome to the Forward Together webinar series, brought to you by the School of Management at California Lutheran University. The series is designed to bring interesting topics and people to our global community of students, alumni, and leaders in business and government to empower, educate, and inspire. Forward Together features experts from industry with the purpose to spark thought, connect people, and stimulate engaging discussions. Please submit your questions in the chat. We will hold a Q&A immediately following the presentation. Today's host is Gerhard Apfelthaler, Dean of the School of Management.
Good afternoon, everybody from California Lutheran University, just outside of Los Angeles. We have a very exciting Forward Together webinar for you today. Exciting for a number of reasons. We have a speaker, Mike Poutre, who is managing partner at Terraform Capital and founder and the former CEO of the crypto company, which has a really interesting story to be told. Today, we will have a slightly different format. Instead of a presentation, we're going to start with Mike talking a little bit about his experience, followed by a short conversation between Mike and I, followed again by the usual Q&A during our webinars. Most importantly, I also want to stress Mike is an alumnus of our MBA program here at Cal Lutheran. So without much further ado, Mike, glad to have you here. Glad to have you back at the university. The floor is yours.
Thank you, Gerhard. It's a privilege and pleasure to be here. Am I coming through okay? Is audio, we all set with there? Can you hear me?
Yes, it works well.
All right, great, thank you. Well, it's a pleasure to be here, everybody, and I am grateful to the audience that we have today. I wanted to start with really thanking the school and thanking Gerhard and everybody about it, because really where I'm sitting today is a direct result of my time spent at Cal Lu. When I started Cal Lu, I think it was late 2010, early 2011 at this point. I was running a small publicly traded technology company that needed a lot of help. I was a bit unusual. I'm in my upper 40s now, right at the teetering edge of it, actually. But back then I was in my early 40s. But I've been in industry for about 20 years, so I wasn't fresh out of school going to get my MBA. So I had a bit of a different look on things. But my time at CLU and what I did there, you know, they say that all roads lead to where we are now, and that really just can't be more true from when I started with this program at this school. That is a very good place in my heart, and I have to say that I'm proud to say that the Terraform team, which is 7 people strong right now, of that, 4 of those people are CLU alum, and that makes me very happy. Giving back to the place to help me get a good start. I have a couple of notes here to work from. And when I started studying, I know that we wanted to get to the crypto company, but if you'll give me a little bit of rope here just to kind of get up through where we were. When I started my studies at Cal Lu, corporate finance and investment banking had been my career. And I had run one publicly traded company before that time, and another one while I was at the school. But that first company was an open-ended mutual fund, an international mutual fund, and gave me my first experience running a fund. And while I was at CLU and taking in everything there was there, I was running this one particular small company, and we did a good job with that. And then after that, and as part of my thesis for my MBA, I'd worked up a new model for how to invest in smaller companies and less liquid companies. And with that, I took that and founded my first hedge fund, which was called the Redwood Fund. And that fund had a small TAM, or total available market, but it was really a test case for the work that I had produced while I was at CLU, and it ended up working out extremely well. I think the 4-year audited return from 14 through 17, when I had that fund, was just over 1,000% cumulative for those 4 years audited. So we really crushed that one. And one of the companies that we had invested in along the way, seeded and founded and subsequently invested more money into, was the crypto company. And the crypto company was the first fully reporting publicly traded company to be in that space. When I say fully reporting, meaning that we were the first public company to have a signed 10K or annual report that had an audited portfolio of over 30 digital currencies. At the time, the only other company who was doing that was Overstock, and the only token they had on their balance sheet was Bitcoin. That's the one they accepted. So we were privileged to break some ground in that area. But we had started that company to show the world that you could be a good corporate citizen and be in that space. That all the clouds around what was cryptocurrency in 2016, 2017, you didn't need to have fear, and I think over, since time immemorial, the more time we educate ourselves, the less unknowns we have, the less fears we have. And that was really our point, was to be able to provide the SEC and the overall regulators documents in the form of Qs and Ks that they are used to, in the form they're used to reading it, producing those documents so they could see and they could educate themselves, and we could be part of that process. And the crypto company had a fabulous run. While I was there, we took the company public at $3 a share, and when I left in May of 18, the shares were just over 600. And I'm not saying that they were properly valued at that point. There was a lot of frothiness in the marketplace, but it was a pretty crazy run. Considering we had our offices in the same building as the Malibu Police Department, we still had to hire armed security to walk into my car every day. It was a very interesting time, but we did some really groundbreaking work, which we've continued really with some of the portfolio companies here at Terraform. And then after leaving Terraform, after stepping down from the crypto company, as Gerhard mentioned, I have a bit of a personal story. My business partner, Ryan, and I, who had come with me from the crypto company, we were supposed to start Terraform Capital in the beginning of 2019. And on January 9th, I got gravely ill and was in the hospital for the better part of the year. I was either unconscious or sedated, and I had 4 surgeries that year. And in the second surgery, I coded and actually coded on the table and died, and went away to the other side and had my time there, and was very fortunate to be able to come back. And it was very interesting. And so I needed my time to convalesce, and thankfully my partner Ryan waited for me, and we launched the company in the Q3 of last year. And in that time, we've been able to continue producing what I think are some very impressive results, and doing some really good work in the blockchain infrastructure space, which is really where consumer adoption takes hold for this whole market, right? And for all the cryptocurrencies. And that's a quick rundown of how I got to be in this space. And we've been working in it since 2016 and 2017, which makes us grandfathers in this space, really. And I have had the privilege and pleasure of going around the world speaking, both at the Consensus, at the Milken conferences over in Abu Dhabi, both here in LA, and meeting with most of the people that really helped put this thing forward. But when you look at cryptocurrencies and you look at where they are and where they come from, it's not such a new idea. Victor Hugo famously said, nothing is more powerful than an idea whose time has come. And if you read, and I would encourage everybody, by the way, to read the Bitcoin Whitepaper. It's only 9 pages long. It's a simple read, but it clearly lays it out, the use case for what the digital currency is and what the benefits of it can be. What's most fascinating to me about that is there are only 8 references to outside works, the earliest one being in 1950, but the bulk of the material being quoted and sourced in there where this stuff was really spoken about was in the 80s and early 90s. So when you look back and see that Bitcoin came out in 2009, this is something that had been on a shelf and brewing for quite some time. And certainly I think with the exacerbated volatility coming with the financial crisis and how the US dollar almost collapsed, there's a lot of people who speculate there's a well-defined correlation between the advent of Bitcoin and coming out of the financial crisis and the utility of having a global currency that's not pegged to a particular nation state. And we've seen that. And a lot of the fears that people had about using Bitcoin for bad things, Silk Road and a lot of the of whatnot, people forget that what made the internet, what the internet gained consumer adoption through porn. It's not a popular subject, but that's really it. It's usually the sin-related vices that get people to do, that lead to some really big, profound things. I mean, bootlegging led to NASCAR, and you see these unintended consequences all over the place, and that's really the case here as well. And now we're seeing the utility being very much realized of how a digital currency can work and how a peer-to-peer transaction can work. And it's really the democratization of capital. It's really taking the controls away from the governments that are manipulating currencies and allowing people who have no control to actually empower them to do that. And we believe in the democratization of capital. We do believe in that. So let me see. I'm not sure how far along I am, Gerhard, but if you had some questions that you wanted to come in and lead in, we'd be happy to take them.
Sure, absolutely, Mike. Thank you for your opening statement. I want to get a little bit into the mind of Mike Poutre, right? You had a very eclectic career. You started out in investment banking. You ran a publicly listed company in the fashion business. Then you started the crypto company. Now you're running a hedge fund. What drives that pivot or the multiple pivots that you have made during your career?
Well, thank you. Well, let me correct one thing you said. I didn't run a fashion company. One of the ways that that companies can go public, other than what's called an initial public offering, which most of us have heard of, is to do what's called a reverse merger. And you take a company that was a publicly traded company, 10, 20 years ago, that maybe it died, right? And now their shares are out there, and maybe and the cryptos company's case, it was making I think women's sporting or fashion apparel. This was a dead company, and what we did was we went out and we acquired that. It's considered a blue collar method of going public, if you will, if I can use that term. But it's also a method that has been used by some of the most popular companies that everybody knows. Berkshire Hathaway, Warren Buffett's company, went public via reverse merger. So did Waste Management. There's, again, a lot of companies have used this tool in the past. And like most things, it goes in and out of favor. These days, there's a very popular term going around called SPACs. And SPACs are very reminiscent of what back in the 80s, with the highly confident letters that Michael Milken got in trouble for, right? And it was very much the same thing, but this is now a public company. So,
right. So, would you say that the career was less eclectic than I think it was? It was basically.
Well, it was interesting. The first public company that I ran, the mutual fund that I spoke about, was a NASDAQ company. And there are two types of publicly traded companies. They fall under the Securities Exchange Act of either 1933 or 1940. And your regular public companies like an AT&T or a Facebook or whatnot, that's a 33 Act company. But an investment company is a 1940 Act company, and it's considered to be the most highly regulated form of publicly traded company in the world. And so being able to successfully run a fund like that on the NASDAQ, the second company that I ran was on the OTC Markets, which is you would call it a junior exchange. It's not as prestigious as the bigger markets, but it has a great deal of utility to it. And the rules and the regulations of how to be a public company apply to both, NASDAQ and New York Stock Exchange companies as they do in the OTC. However, and so going from running a NASDAQ company down to running an OTC company, I thought I was really just taking a step down. It was going to be easier. It was like going from AAA ball down, or from Major League ball down to AAA ball. But in fact, it was like going from baseball to cricket. You have the same rules, but they're just not applied evenly among the exchanges. And I mean, that's just an inequity of life. It's all over the place. So understanding the nuances between how the OTC markets worked relative to being a publicly traded company, how the larger markets work, and how the regulators interface between them was really eye-opening. And as such, what we found was an inefficient market, right? An efficient market is, by definition, something where you don't have a uniform dissemination of information such that you can legally and ethically create supernormal returns simply because you've done the digging, you've done the homework, right? And that's how it worked out. And we were able to do a really good job with my second publicly traded company, a small tech company, which then led to both my fund and then becoming a CEO for hire and helping companies restructure, refinance, and do certain things.
Okay, that makes sense. So when did you start the crypto company? What year was that?
We started that company, and it was an idea in January of 17. We formed it in March of 17, went public in June of 17 at $3 a share, and we didn't do much. And then we had a panel. We had one of our executives was a panelist at a conference, and somebody caught wind of him. I think it was on the Motley Fool or something like. And one of the major investing websites ran a quote from some of us, and our stock went from 3 to 30, and then it just started flying from there. And people associated directly with crypto, with Bitcoin and different currencies. Excuse me, which of course it's not. It's a stock. It's a publicly traded entity, but nonetheless, we were caught in the heady days, the frothiness, and a lot of people flocked to it, and it was a very interesting ride. So
yeah, can you walk us a little bit through the process at that time? What was the environment like mid 2017, and why did you decide that it was the right moment to start a company like the crypto company?
Well, we needed, when we looked at what was going on in the space, we're like, okay, whenever we've seen a major tectonic shift in a technology with something that gains consumer adoption, you want to look at, okay, where, as Wayne Gretzky would say, where's the puck going to be? And in this instance, we looked at, there was going to be a lot of money coming into this. And the best way, I guess, to look at it with like the exchanges that were there that could facilitate the trading was more like an eBay or Craigslist for cryptocurrencies, as opposed to, say, a New York Stock Exchange for them. The spreads, you could drive trucks through them. The latency between how, for how long it took a trade to be recorded was forever. And we noticed that there were efficiencies to be gained by investing in the infrastructure. And as you grew up in the investing world, you always have the idea of being, it's called the Levi Strauss of the gold rush, right? Not too many people find gold, but everybody needs a pick and an axe and a pan to find it, right? So that's really where we're coming from, is to provide the piping and the infrastructure that was going to allow us. So it didn't matter which token was going to win. It's just they were going to have to use our piping to get there. And that's really that. And we had made some great moves, and we had done some really good work there. I was very proud of the work we did while I was there.
Yeah. You spoke of the frothiness of the market that ultimately became a problem for the crypto company. With what's going on recently in the crypto market, do you see a similar frothiness?
No, it's completely different right now. Like the initial frothiness, if we're speaking frankly, my personal ideas on that are, look, if you look back to the financial crisis 10 years ago, or just over that now, it's getting longer in years. You look back to the financial crisis, and you look back to when all of the subprime mortgage brokers were actually failing, but the credit default swaps weren't moving in price, which they should have been going through the roof. Why? Well, big business, big banks, your Goldmans, your Morgans, your Chases, they didn't have their pieces in place, and they weren't about to get killed. So they held it, and they didn't move the market until they're able to maneuver their own chess pieces on the board, such that the A couldn't get hurt and B could profit. And last year you had a Forbes article saying that, this is for 2020, I believe, that one of the top blockchain companies is going to be Goldman Sachs. So now you have Fidelity. It's come out, launched their digital assets desk, and you have major infrastructure that's being put down by the major players at this point. And now they're going to turn the faucets on and let the water come in. And later this year, I'm sure you're going to see the SEC approve the first ETF, which is coming through, because there's only two providers that can handle the ETF system, and that's either going to be State Street or Bank of New York. BNY Mellon, and in terms of being an administrator for them, and both of them have solutions already lined up. We're aware of this, so that's going to come on. And when you allow those ETFs to take place, it's going to be another massive influx for this into Bitcoin. And Bitcoin is it is the standard, and again, also not priced into Bitcoin, by the way, is the fact that since inception, you probably permanently lost almost 20% of the coins in circulation. So I don't think that's being really priced into the market either. So, but we're very bullish on Bitcoin. I think Bitcoin certainly within 5 years should be $1 million or close to it. And ETH is going to continue to do well. And I'm sure everybody's out there wondering about Dogecoin. Dogecoin is just pure speculation. It's absolute Vegas. It's like, there's no end in sight to how much you can mine, and you can, so if there's unlimited supply, I don't know how it can hold value, but it's Which is not to say that you don't make money when you go to Vegas, just caveat emptor. Just know that there's really no merit to it. It was started as a joke and it's taken on much more of a life, but we'll see where that goes. I don't consider Dogecoin as an actual investment. That's just pure speculation.
So are we really, when we talk about cryptocurrency, we're talking about two different stories here, right? The one is the one that is becoming mainstream, as you just pointed out, and then there's the other one where all the hype and the craziness is happening. Is the craziness going to go away? Is it going to go away soon?
No, because you're getting different levels of consumer adoption coming into this. I mean, it's, I would say, you still have people in America, United States alone, let's just speak about the United States. There's still people in the United States that haven't heard of Bitcoin or still have no clue what it is. And from that, they're going to have less of an understanding of what blockchain is and how blockchain can truly help. And where you're seeing, it's interesting from an investor's perspective, from us looking at companies, because in Internet 1.0 and in the early 90s and the late 90s, in some moments of lucidity, the U.S. government had passed some regulations that really kept the brain trust of the Internet here, the information age of the Internet. Now we consider ourselves to be in the value age of the Internet, right? And we look at what's going on with blockchain, and the United States is not keeping up in terms of having laws that are going to keep that brain trust here right now anyways. And you're seeing a lot of tertiary countries, nobody that's in the G8, but you're seeing a lot of smaller European countries and countries that want to be players. They're looking at this like more of an equalizer, because as they adjust laws that are more favorable to blockchain environments and companies going there, Switzerland being one of them, a lot of that brain trust is going over there. So you're finding, and also, by the way, in Europe, in the United States, blockchain and crypto startups are still 24-year-olds in the garage with their family or dad's $10,000. In Europe, these are state-backed ventures, by sovereign funds, and you have the head of NATO, former head of NATO, who's running one of these things with $100 million in his back pocket, or his or her, whoever's running it. So seeing where it is going around the world, water is going to find its own level, and you're going to see these ebbs and flows back and forth. But it provides some really fascinating opportunities if you know where to go find them.
Great. Yeah. We have a ton of questions already pouring in, so I want to get to them. But before we do that, I'd like to get a little more personal also. You mentioned that, you had a life-changing event, you had a life-threatening event, you actually died clinically for a period of time. Of course, you had to deal with the hype also at the crypto company and the challenges that came with that. How has all of that changed Mike Poutre? How has that changed you as a businessman and as a leader?
Well, it certainly makes you more reflective. I'll give you that. It's humbling. It's humbling. It gets you have to sit back and take a look at everything differently. Look, I'm very fortunate. My father died a young man just over 27 years ago, and he was younger than I was today. And I remember at the funeral, the priest asked the congregation, out of everybody you've met in your life, how many of them are better off for having met you? And that stuck with me every day. And it's tough, especially in business, and especially when you're in finance. Unfortunately, I can't say that everybody I've ever met in a business sense is probably better off for having met me. And that's a tough pill to swallow, to acknowledge and look yourself in the mirror on. So you endeavor every day to do the best you can and live true to your ideals. And having taken my time over to the other side and being very fortunate to have a glimpse and being able to come back. And by the way, I'm not saying I know more than anybody else. I know what I saw, and all I know is I have more questions than I do answers. But it was, I just say a greater sense of humility and a greater sense of drive to be able to, do things that matter. Just do things that matter. Really, just if you're going to apply your talents and your time and your efforts to doing something, let it not be for no purpose. Let's try to do things. And so the investments that we make at Terraform, they all have a purpose inside of our portfolio. Yes, the purpose is ultimately to make money, but it's to do something. It's not to make money for money's sake. It's to make money for its particular purpose and to be able to help push good agendas and not bad business.
That would have been great final words for the webinar, but we aren't quite there yet, right? You mentioned the role that education played early on in your statement. I want to get back to that a little bit, and not necessarily focusing on your MBA experience here at Cal Lutheran, but in general, what do you think was the role that education played for you? What is the role that education plays in general in an economy where a lot of people are questioning the value of education?
Well, I think education, in my case, I don't think you can bifurcate it from culture, which is really one thing that I look at. So if you consider that behavior is what we do and culture is how we do it, then when I look at how particularly at Cal Lu, and this isn't just to really push Cal Lu. There are some classes at Cal Lu that I don't have a great deal to say about, but there are some that were completely changing to me. There was I mean in the program, and I don't know, I would be humbled if he's on today, but if Professor Akbari, he has got to be the hardest professor that I've ever had. I signed up for him 3 different times because I needed to be pushed. And management science is probably the finest class I've taken at any institution, and that includes some of my PhD classes at Pepperdine. It's my career was advanced forward from the thinking of that class. So it's there's really good stuff to be had there, but more importantly, it was the people. And one of the things that made Cal Lu very valuable to me, by the way, is it has a very large Asian contingency. A lot of the students there are from Asia, and in particular China. And where are we going to be doing business in the next 20 years? And so coming away from that, I have a lot of great relationships that are over there right now, that in Central Europe and in the Far East, that are a result from that class. And again, like I said, it's the understanding what we went through and how we learned, and knowing that I can trust these people is what's helped me surround myself with people that I can trust, because that's how you get business done. You can't do everything by yourself. You have to be willing to understand where you can put stuff in other plates, and how you can diversify both your assets and resources, or as Professor Akbari would say, crash the model, right? And be able to do things in the most efficient way possible. So CLU, the education was great because, most of my MBA reaffirmed a lot of the stuff I learned on the street, learning it the hard way. And it's, an MBA is an interesting, it's an interesting degree because most people fall into either a quantitative or a qualitative bent, right? Most people find either you're really good at math or you like philosophy and literature. And an MBA combines both of those doctrines, right? And it forces you to both exercise the qualitative and quantitative aspects of your brain so that you can have a good cross-section of understanding of the things you're looking at. I would say, I hope that answers your question, but that's really how it's helped me.
Absolutely. We should hire you as a salesperson for the MBA program. I certainly appreciate the kind words that you have to say. I want to get to the questions now, and please bear in mind that we have some people who have been in the crypto space and blockchain space for quite a while, but we also have some novices. So we have some very basic clarifying questions.
Sure.
And one of the first questions is, I see a question by Will Reed. How would you even define cryptocurrency? Is there a common consensus as to what qualifies as a cryptocurrency?
Well, that question is simple in the asking and slightly more complex in how you look at it, in that there are different types of cryptocurrencies. In terms of what they're used for and whether or not something is a token or a currency or a utility token. For instance, Bitcoin, the creator of Bitcoin, of the anonymous Satoshi Nakamoto, we know that that's not the real name. But when you look at in order to first get Bitcoin, you could not buy them. You had to sign your computer up and you had to solve problems. You had to do work, proof of work. And your reward for solving or increasing the hash network or being a node and doing the problems was getting your reward for that work was a Bitcoin. Now, that had value and generated value, nobody ever paid for it. And so it's not like when you buy a stock from a company and they were trying to fund themselves, and when you buy that stock from the company, that company gets the money so they can go build their business and run their business plan. That was never the case with Bitcoin. Bitcoin has never benefited from any of the money sold or that they're exchanged for. So therefore, it's never going to be considered a security. But some tokens do. Some tokens did issue tokens and raise monies for that, qualifying them as securities. Other tokens that are like utility tokens, such as ETH or other of the like, whereas you have to use them to participate on their network. And when you're completing a transaction, you're actually using up a piece of that token, right? So there are different flavors of tokens, but a digital currency is certainly something that is it's stored value, it's implied value, and you can go back to the very first minting of money in 2300 BC when you had the Lydian lion in Turkey, which baffled most people, by the way, because most people thought the cradle of civilization was about 500 miles away over in between the Tigris and Euphrates. But now they recently actually found Göbekli Tepe, which is southern Turkey, which makes sense why you had the first tokens there, because it's an exchange of something, so we don't have to kill each other to eat, right? It's just a uniform metric, and it's an agreed upon metric, and that's all the digital currencies are. Is it's a new way of understanding a transfer of value, and it either holds value to you or it doesn't. So it's just like in the United States, if you had a Honus Wagner baseball card, you'd be a millionaire. If you were, in Mongolia, it would not get you. You might roll some tobacco in it and have a nice little cigarette. But value is different wherever you go in the world.
Right. So when I go on a crypto trading platform today, like a Coinbase, I see hundreds of cryptocurrencies there. How do I separate the wheat from the chaff? That's another question that's coming in through the Q&A.
It's a good question, and there's a ton of altcoins out there, and the NFT of the non-fungible tokens is a whole new category that's coming up, that's pegging things to specific real world items like pieces of art. I'm sorry, you know what? I just lost my. Just repeat the question once again, please, Gerhard. How do you set the wheat?
How do you separate the wheat from the chaff? When do you know it's safe? Right, a cryptocurrency is safe.
Well, safe is a relative word, and so it's you have to ask yourself the same thing. It's like, is there gold in Fort Knox? What is our ability to repay the United States debt? Is a dollar safe? So it's the question itself is relative. For our vantage point, the ones that we consider and the ones that we look at for investment are Bitcoin and Ether. There are a lot of altcoins, especially when we had the crypto company. We were some of the first investors in Celsius. We bought Mana, which is Tomorrowland. We would have done really well. That portfolio was fabulous. So the two big ones are Bitcoin and ETH, and you have XRP and Stellar Lumens and some others. And there are a lot. I mean, even in by the time we'd reached 2017, you'd already had thousands and thousands of digital tokens that were born and died. So there's going to be a continued life cycle of these things. Some of them are going to grab hold, some of them aren't. By all space, by all rights, you just, MySpace, Facebook should never happened if MySpace had their sense about them. Under Armour shouldn't have never happened. It should not have happened if Nike or Adidas had been aware of what was going on. So to the extent where anybody gets big and there's an opportunity for another comer, that's the great thing about technologies. It moves so quickly, is that you're going to see people who find inefficient markets take advantage of them and try to extract value. And so it's just a matter of staying current.
I would say that's a great thing about business and entrepreneurship in general, right?
Yes.
Sherry Hansen has a question. Do you think that digital currencies are going to replace national currencies in the near term, next decade or so?
Governments are starting to figure out that they want that, and it's criminals that don't want that, or people that don't want that, or I don't know, even I guess old-fashioned people don't want that. But whereas initially governments were fearful of it because they thought you could hide it, they started to realize that everything digital leaves a footprint everywhere all the time, and it virtually never goes away. So you can track Bitcoin. If you can look, you can go on to Chainalysis, you can go on to different companies, and you can find it. And by making things purely digital, then you are really going to be able to the monitoring will go up substantially. And that will continue, by the way, to create, I think, a rift between things. Because one of the interesting prospects about this and why governments have been slow to be able to regulate this is because the whole advent of digital currencies and cryptocurrencies was anti-regulation, was anti-government. And so the people who seek to regulate these things the people who know about them, they can't afford to hire them. And it's against their interest to even hire them. So governments have had an uphill battle of really being fully educated and properly educated on this stuff since the dawn of them. And I sense that there will continue to be a competition for it, because you're going to have your purists who say peer-to-peer should be the only way to go, and government doesn't need to interfere with the peer-to-peer transaction. And that way, two people doing business on a dirt road in Kenya can exchange value with each other, without having government regulation or government, or doing whatnot. And governments, of course, are going to want their taxes, and they're going to want to know where their money is and who has it. And you just look at the wars we fought, and how many billions of dollars of U.S. currency did we find in Iraq and elsewhere, right? And I still, to this day, last time I was in Egypt was in 1997. I think the most U.S. currency I've ever seen in one place was in the Egyptian casinos. I mean, it's the U.S. dollar is everywhere, and I think governments would like to get a hold of that digitally and have an understanding of where their currency is. And so I think you're going to see that progression, but you're also going to see the purists actually try to fight it, or try to make sure it's not necessarily as traceable as the governments want it to be.
There are a number of questions in the Q&A about a related subject, the subject of tax. So what does the IRS think about crypto?
You're asking me to put my mind inside that of an IRS agent. That is a scary prospect. We know that the current administration, and this is not meant to be a political statement at all, but I know the current administration is severely beefing up the chops of the IRS to have more teeth, and particularly as it relates to digital currencies. The best thing that people can do is keep track of your trades. Even if you have to do it on an old-fashioned notebook and pen and paper, keep track of what you buy and what you sell, when you bought it, and do it, and just make sure that you can represent it. At some point in time, the government's going to want to get their taxes, and if you buy it and make a profit and you live in a certain geographical area, you need to be taxing somebody on it. So just be mindful on it, because it's not a tool. It can be used to try to escape some taxes, but more often than not, they're going to find you. It may take some time, but you don't want that call, because certainly the IRS is the only part of our government where you're guilty until proven innocent, and you don't want that fight.
Yeah. Mark Palamountain actually also asks a question related to government and the IRS. He's asking whether or not the Fed is actually helping or hindering the growth of cryptocurrency, and if you think that they will have a role in managing the growth in the future.
They do. They're concerned about it, and I know that they're looking at it. A good friend of mine had just actually retired from the New York Fed, and he was in charge of all digital transactions. It was like $3 or $4 trillion a day he oversaw. They're closely looking at how this affects us and where we're looking at it. But the Fed policy, if that's the nature of the question, I want to make sure I'm understanding it properly. But I don't think Fed policy has much to do with the adoption rate of the digital currencies. That's until and unless, of course, you're thinking that Fed policy is somewhat being massaged into looking at nuancing or interpreting news and data a certain way. I mean, right now, the Fed is saying, for instance, that we're not really the spike in inflation is a one-time thing that's related to COVID pandemic coming undone and people getting back to work. But there's a lot of dissension on that philosophy, and you're starting to see inflation rampant everywhere. So to the extent where any Fed policy is trying to assuage, the greater economies, you may have some reverberation effect on there, but in general, I don't see a great correlation.
Well, let's change the perspective on that question a little bit, right? So when you look at securities, Wall Street definitely is trying to influence government policy, right? That could have a detrimental effect on what Wall Street does. Who is doing that in the crypto space? Are any players in the crypto space trying to influence policy?
There are some lobby networks that have started up, and you do. And my partner and I actively advise a couple of members of Congress who are sitting on the Financial Services Committee, which oversees the SEC. We did this as far back as we had congressmen in the offices of the crypto company to educate them on how things are going. So there are a lot of voices out there, and there are a lot of people who are there are a lot of people in government who are very curious about this. Unfortunately, there are not a lot of finance people in government, even on the finance committee. So it proves to be somewhat of an uphill battle with the educational process, but people are trying to learn.
I noticed that there are a number of questions talking about the carbon footprint and the energy consumption that is attributed to the mining. Do you have any comments on that?
Yeah, well, that's one of those things that can be an unintended consequence, meaning that looking to, where are you going to find cheaper energy? I mean, you're starting to get a lot of, there was a lot of mining operations that were going on in Iceland because you had natural cooling from opening the windows, geothermal warming from the ground, and looking for places that had cheap electricity. And it was, interesting, very similar to it's like going from using a road map to using GPS, and all of a sudden you start to get a line of cars during rush hour going through these small neighborhoods. They're all using the same GPS. They never used that route before, and all of a sudden you create an entirely new route. I make a similar analogy to what we're looking at, just in terms of seeing where cheaper energy prices are going, and all of a sudden you see some server farms pop up there that are just for mining. And where it's going. And yes, there was a talk about this several years ago, and there's no consumption tax on it. You could also make the same argument, by the way, in California, that for auto drivers, like people who drive electric cars, pay no tax, no gas tax towards the roads, and electric cars are heavier and do more damage on the roads than regular cars. But the only people paying for that are people who drive internal combustion engine cars. So it's, regulation at some point in time may catch up to it, but right now people just try to find where the cheapest spot for electricity is, and they can go in and set up their servers. But now you can't even get the carbs because you have such a choke in the supply chain.
The old question of externalities, right, and how to account for those. There are a couple of questions refer to the Bitcoin white paper that you mentioned. Can you provide us with some more information on that? Where do people find it? Is there a specific title that they should be looking for?
All you have to do is Google Bitcoin white paper, and it'll be one of the first things that pops up. And it's a free paper to people to read. It's very it's easy. Yeah, it's not a difficult read. And what's interesting is that one of Ryan, my business partner, and I are very fortunate in that the gentleman who's credited with creating the blockchain, his name is Scott Stornetta. If you read the Bitcoin white paper, there were only 8 references to outside works, and Scott authored 3 of them. And he's been a wonderful resource for us. So having direct phone access, or having the bat phone to the person who's credited with creating blockchain, as well as a similarly lofty and I would consider enlightened brain trust from the work that we've done early on in the space, has contributed a lot to the success and the experience and acumen we've been able to generate.
You'd be happy to hear that your favorite professor, Ali Akbari, is actually on the webinar, and he asked a question about COVID-19 and cryptocurrency. Was COVID-19 a good thing, a bad thing for crypto?
That's a good question, but Gerhard, I would challenge you to say it with Professor Akbari's accent. I think he has the most unique accent I've ever heard. I don't know if it's Persian or English, but it's somewhere in between.
Come on.
It probably didn't hurt it. I don't know if you could say that you could directly, if I'm going to draw a scattergram, right, Professor Akbari, and try to draw an actual correlation. I don't know if you could. I think you could probably do that if you really had the time on your hands. But to the extent that everybody was home and on their computers and playing with this more and sticking and watching the headlines, it probably didn't hurt. There was probably some decent consumer adoption and coming with that. But most of that, honestly, it came from the bigger banks. It's the larger players. I mean, it's your Goldmans. It's all your major players that weren't going to let this thing move forward until they had their infrastructure set up. And now that they have their infrastructure set up, they're allowing this to go in. And that's part of the ideological struggle between Wall Street and the cryptocurrency people, is that Wall Street is trying to take a square peg and shove it through a round hole. And they have the force and the might to be able to get it done, by the way. And they're taking, they're creating bastard products that fall under the umbrella of crypto, so they can tell their Fidelity clients and all their mutual fund clients they have crypto investments. But that's not really what it's there. But the proliferation of that, and when those ETFs come through, and when you see those massive dollars go into these ETFs, is going to have a huge buoyancy effect for your major currencies, your initial currencies, and it's going to allow. And just as in you go back to the start of Silicon Valley, that all came from Fairchild Semiconductor, and some of those guys leaving on their own to start Intel took it public, blew it up, and then were millionaires, and they took that money and put it back in. And the same thing is going to be here, I think, when this tide comes in and lifts all these Bitcoin boats up, you're going to have a lot of people with a lot of new money, and they're going to want to repeat that process, and they're going to innovate, and but it won't be stuck in Silicon Valley. It'll be all over the world. So it'll be really fascinating to see, when that buoyancy comes, when that tide really comes in for the first time, and things really blow up, and Bitcoin gets into a couple 100,000. How much that money's created, where it's created, and where it goes, and where it's going to find to drive to the next level of technology.
I really need to watch the time, because we're running this as a lunchtime series, at least for those who are here on the West Coast. A number of questions came from different audience members about where do we start? If we want to invest in crypto, where do we start? Where's a safe place to start? Where do we go?
Yeah, my advice would be, like, Coinbase is so easy. It's the Apple of any of these products, the iPhone of any of these products, right? Remember, Steve Jobs' whole mantra was you should be able to take it out of the box and use it without any instructions. Coinbase is as close to that as you can get. I would recommend, get on there, and just, again, you can buy fractional shares. You just put a few $100s into Bitcoin. If you've ever gone to the horse races, the difference between watching a race and having $1 bet on a race is everything, right? So just get in there and put a little bit of money to work, and just let it just watch it. Look, you got markets that are liquid 24/7, 365. I think one of the greater questions of unintended consequences is it's now making the stock market look prehistoric, look ancient. So and now that the stock markets are all digital, why do they need to close? Yeah, it doesn't make sense. You don't need T+3, trade day plus 3 days for settlement in the securities markets anymore. You just don't, because on the blockchain things settle instantaneously, immediately. So it'll be very interesting to see the reverberations into the securities markets coming back over. I think that's going to be a neat place to look going forward.
So I think I'm going to just ask one last question from you, Mike.
Sure.
Kind of closing the loop to the personal story. What are you most proud of so far in your career, and what is the one thing or the one next thing that you want to achieve?
Wow, I've had some of the greatest minds that I know, and some people that I trust, those people I have the most respect for, that when I started this company have said they wanted to come back and work alongside me. That's very humbling, and I'm very grateful for that. So then that's and again, that's an all roads leading to where you are now. So to the extent where, again, it's being able to be productive and do things that matter. If you have something to say it in a manner that makes people want to listen. And just it's the last time I spoke at Cal Lutheran, I ended with the same thing. It's like, look, everybody's going to do something, but don't be the person who's doing it, not going to do it. So I'm very proud that, look at it. I didn't work for a year. I was on the couch. I was convalescing for a year. I got wiped off the map. I was eclipsed, gone, bye-bye. I couldn't do anything. And then you get up one day and you put one foot in front of the other. And now we've got, through the efforts of Ryan and I, and especially the team that we have under us and around us supporting us, we've got a fund that is doing really great work. We're leading a Series B round right now for a company that is a darling of Silicon Valley, and the cap table reads like a who's who of Sand Hill Road. It's probably the highest profile deal of my career, and we were asked to lead it over other people because of the experience and acumen that we've been able to put together. And so, to be able to be recognized by people that you consider to be the smartest people in the room as having some good work behind you and under your belt and be able to do it. I'm very grateful for that. And I'm grateful for the relationships that I make along the way. I mean, Michael Crichton, he said, at the end of the day, the only thing that matters are relationships and experiences. So if anything that I've gone through can help anybody in this call, then I am humbled and grateful.
On that note, Mike, thank you very much for being with us today, for sharing all your insights. It's been wonderful. This could go on forever. And we actually have to have quite a number of questions in the Q&A that remained unanswered. What we're going to do is we're going to download them and see if we can get them answered individually after the webinar. So please, if you have a question that's unanswered, bear with us. My apologies go to you. I also want to point out our next Forward Together webinar on May 26th. We have a guest from Japan, not Japanese though. Professor Parisa Hagirian will be speaking on surviving crises, lessons learned from Japan. She has been living in Japan for most of her life, is an expert on Japanese business and culture. That's going to be a very, very interesting one as well. Again, thank you very much for being with us today, and special thanks to Mike Poutre for coming back to his alma mater. We're proud of you. Bye-bye.
We thank you for participating in today's Forward Together webinar series, brought to you by the School of Management at California Lutheran University. The School of Management offers a broad range of programs and community services. Whether you're looking to upgrade your career, locate current economic data from our Center for Economic Research and Forecasting, or a place to start and grow your business at Hub 101, our community startup space, we invite you to visit us at clu.edu/SOM and join the community as we move forward together.